Here's a look at the price of crude oil. It has traded higher today, but the path of travel recently has been down. You can see it's down 4% on the week and much more than that over the past several months. However, the price remains on track for the largest weekly decline since 2024 as Donald Trump's on again, off again tariffs inject volatility into the markets. Let's speak to an expert into the geopolitics of oil. Helma Croft is head of global commodity strategy at RBC Capital Markets, and she joins us now. Helma, thank you very much for joining us. I've done my best to read up on your recent notes. You've tackled the Russia-Ukraine situation, the OPEC situation. I believe you've even made a visit to Riyadh. So plenty to talk about. Let's first of all, I'd love to get your view, first of all, on the topic that everybody's thinking about, and that is views of the U.S. economy and I guess by extension, demand for crude oil in the U.S. from the frantic and confused tariff announcements that are coming out of the White House almost hourly.
I mean, there's certainly been a lot of policy uncertainty emanating from Washington, and it really is becoming like an hour-by-hour decision as we watch to see what is really going to be the impact of tariffs from Washington on Canadian crude imports. Now, with the latest exemption discussion, it looks like the bulk of Canadian crude will be exempted at least, till, April. But again, the decision will be coming up again in April. So not easy to plan the outlook when you have this many rolling tariff decisions in no finality. But I think there's also just a broader concern because you have tariffs on China, potentially tariffs looming with the EU. So it's raising a lot of concern about what the overall demand impact will be from these measures.
Many people believe that tariffs on Canadian crude oil would translate to higher gasoline prices in the United States, that U.S. consumers, U.S. gasoline buyers would have to absorb at least some of those increased expenses due to tariffs. Do you agree?
Certainly in the Midwest, we would be looking at potentially around 15 cents a gallon for consumers in the Midwest. I think that was part of the reason why Canadian crude had a lower tariff than other goods. I think there was a discussion likely in the White House about what the impact would be on U.S. drivers in the Midwest if they went forward with the full tariffs that were initially being applied to other goods. But again, not a cost-free decision for a White House that has been focused on trying to bring down the price of oil by telling U.S. producers to produce more, trying to get OPEC to produce more. He's also withdrawn the license for Chevron to operate in Venezuela, which could lead to dislocation of those barrels as well. So it's hard to sort of look at the direction of travel and policy and saying, is it going to be bearish for oil or bullish for oil? Because also they've promised this week to have stricter enforcement of sanctions on Iran, potentially inspecting cargoes to make sure they're not carrying illicit Iranian crude containers. So it's all a lot of uncertainty. And again, it's causing volatility in the price of oil.
How about the Russia situation? You've written a piece on that quite recently in the past couple of days. Of course, then the development there is an abrupt pivot away from support for Ukraine from the U.S. administration to seeming support for Russia. What does that mean for sanctions that have been placed on Russian oil?
And as you mentioned, things go up and they go down. We had the dramatic meeting in the White House with President Zelensky that ended very abruptly. There's discussion about new negotiations with the United States and Ukraine taking place in Saudi Arabia next week. Interesting, the role that Saudi Arabia is now playing as a sort of center of global diplomacy. But certainly the improved ties between Washington and Moscow has led some in the oil market to expect a quick easing of U.S. sanctions on Russian energy. Now, one thing we would say is that the bulk of the sanctions on energy that have been particularly punitive have been enacted by Europe. Usually the sixth package of sanctions is something that we point to as particularly impactful. That was a ban on seaborne Russian oil imports into Europe, a ban on the provision of services to move those barrels to third markets. Nothing to indicate right now that Europe is proceeding with sanctions relief on Russia. If anything, you've had statements from European officials doubling down on their support for Ukraine. We've also had increasing Ukrainian attacks on Russian energy infrastructure. So I think that is a story to continue to watch. So too soon to say that we're going to have the return of Russian molecules to its most important market, which is Europe.
Okay, OPEC has recently affirmed its commitment to proceed as planned with an increase of daily production. What are the implications for the markets there?
So if you ask me what was a catalyst besides tariffs for the downward movement in oil prices, I think the decision of OPEC to go ahead with their, phased increase of barrels. They outlined this plan last June. They had put on pause the monthly increases several times, but their decision to go forward in April, I think, caught a number of market participants by surprise, given that we don't know yet the economic impact of tariffs, what that's going to mean for demand, what the path is going to be from the U.S. on sanctions. But OPEC came out and said, we are going ahead. Now, that led some to believe that perhaps Trump was putting a lot of pressure on OPEC, concerns that OPEC was potentially having some internal challenges. But what is interesting in the last 24 hours is we've had statements from the Russian Deputy Prime Minister, Alexander Novak, who oversees OPEC policy, saying that this was done purely because they think there'll be an uptick in demand later this year. You also had statements by Kazakhstan's energy minister this morning indicating that Kazakhstan will be bringing its production down in line with its OPEC plus quota commitment. That was something we were watching because a number of foreign companies, including Chevron, are operating in Kazakhstan. So the question would be, how could they manage their relations with the IOC? So we will be watching whether Kazakhstan does indeed have better conformity with their OPEC plus targets. So statements in the last 24 hours would seem to be pretty clear messaging from OPEC plus that they are not breaking up, and that if the new barrels on the market, and it's only about 140,000 barrels, if that proves too challenging to the market with those barrels, they can always pause and reverse that decision in coming months.
So much more we'd love to ask you, but we are rapidly running out of time. Can I ask you if you have a price target on WTI for 2025?
So we do, but one of the things I would say is we also would say it's very, very policy dependent. So you can be talking about WTI in the low 60s, but that's a policy neutral call. So we really are going to have to see what happens on critical issues like Iran sanctions. Is there strict enforcement of these sanctions? That could be very supportive of prices. Do we see more unrest in the Middle East? What happens with sanctions on other countries? And on the flip side of that, we really do have to see the tariff impact. So I would say that the direction of travel on prices, you really need to look to what's coming out of Washington.
Helma, thank you so much, as always. Helma Croft.